Welcome to readtheticker.com. Here we have a chart of the Dow Jones weekly. And on this chart we have a 5% trailing stop based on the low of the day. As you can see on the blue line here, this is the cut-off around mid-November 2011. To the right of it, it shows that most pullbacks are no greater than 5% or very, a minor spike over it. Pretty much all pullbacks are pretty much under 5% or less. That's a very strong uptrend with very weak pullbacks. Before the blue line, we obviously can see from 2009 we had some pretty serious pullbacks of 20%, 12% and 20%. And from, like I said before, past November, very minor pullbacks. Now within readtheticker.com, the analysis chart, we have a tool called period scan. And period scan will take a selected range, and we're going to take from November to current this price action and scan the Dow Jones over the last 200 years to see what other time frames are similar to this rally. So we're looking for a 2-year rally with very minor pullbacks and to see what happened after it, because after all, this rally can't continue forever. I doubt it's going to continue for another year without 5% pullbacks. We're bound to get some volatility to come in the market soon. So here we've got a pretty much we've got a very aggressive rise, minor pullbacks, and we want to find within the last 200 years similar setups. For those who are members, period scan is down here when the cursor goes yellow in the analysis chart. Okay, so here's our period scan here. I've loaded in, you can do this with any symbol, by the way. It doesn't have to be an index. You can load Apple in, Google, and use scan Google pattern against other stocks like Microsoft and QQQ and what have you. So I've loaded up the Dow Jones with the time frame in question, November 2011 to the current time, and we run our correlations. And I must state that correlation is not causation, but it is just to sort of see what happened in previous time frames. Now, you really want a very, very strong correlation. Anything over 95% is worth looking at. So that's a 2-year period over 95%, and the correlation under 95%, you have to give it the due respect. So the first correlation we get is 1884. Okay, so that's what happened after 1884, after 2 years of pretty much aggressive rise. Okay, now when we look at the period scan, we see to the left, we see the blue, which is the pattern that is found. It mirrors our pattern. So this pattern in 1884 to 1887 is a mirror of what goes on between 2011 and 2014. As you can see, it was a 2-year solid rise, pretty strong. Came to a period of pullback. It probably looks about it's about a 15% pullback, which is a normal reaction. Okay, that's pretty good. That's the highest correlation of 98%. So that would suggest maybe volatility might be coming to the market in 2015. So let's do a couple more. And this is 61 to 64. So this is a mirror of what happened in 2011 to 2014. Very strong rally, very few pullbacks, and sideways pattern, a minor dip. So it's again a bit of a pause coming up. So this makes us yet 2015, the first 2 quarters might be sideways to down. That's two highly correlated charts. And we look at 1953, the start of 1953. So these are highly correlated. 1953 shows the blue going up very strong. Once again, very strong move with hardly any pullbacks. Sideways reaction, and then a bit of a shock in the middle of the year. Then it continues on. Well, that shock of the year will be in October type thing. So once again, it reflects maybe 2015 might attract pause and consolidation, a bit of volatility. So we're 53, 84, we've done that one, 61, done that one, 995. What does 995 look like? Yeah, 995. I think this is a bit different. Here's our correlation here between 2011-14 with 1965 and 98. I actually know what happened here. This red smash down was the fear of the long-term capital crisis crash. So that's a pretty sharp correction. So unless we get a extremely powerful event smashing the market down 20%, this is probably a bit unlikely. Okay, no, 34. Really, what happened on 34 then? Yeah. What's that? So, this is the recovery 2-year rally from the bottom of the lows of the Dow. The market crashed in 1929. It smashed right down, and it bottomed in 1933 or 34. Sorry. Then there was a strong 2-year rally, which is what we got here. Now you can see the correlation sort of breaks down right at the end here, and then there's another smash down, and here. So like I said, there must be some event here. So unless there's an event early on in 2015, I think this is unlikely. I can. Yeah, 94, 80, 62, or we've done something in the 60s, 48. Have we done something in the 50s? Oh, I'll do 48, so that looks like. Well, this is a very aggressive stance where it sort of rallies up for 2 years, correlation a bit weak in the beginning, and it just goes sideways. So 2015, you maybe suspect some sideways action, some base building up the cause for further gain. So I think we can pretty much expect 2015 to start off positive, go sideways for a period of time as people consolidate gains, as the market works out the trend. In the middle of the year, or post May, I would suggest whether it's going to go up or down. We may get a shock. If you're going to go sideways, you may get a bit more of a plunge down beyond 5%. It's highly likely. After all, profit taking is normal in the market. But I would suggest the majority of the period scan suggests a pause, consolidation, maybe a bit of a dip. Then after that, it's see what happens. I'll just show my highly correlated once again. End the video on that. Okay, this one actually showed a bit of a dip. What was the other one? Yeah, something like this, I think. We'll probably get some sideways action first quarter, maybe a bit of a scare, recovery, and see what happens after that. May's always an interesting time. Once again, the period scan can be used for any symbol, scanning other symbols, other indexes, or scanning the symbol itself. Very useful tool. Thanks for watching.